Zoom video stock, ticker symbol ZM, could potentially crash down soon because a wealthy investor spent $926,000 shorting Zoom stock using options. So in this video, we will analyze this unusual options activity to find out if Zoom stock does crash, how far could it potentially go down, and how can we take advantage of this potential inside information and also make money like the wealthy investors do. So without further ado, let's get to the details of this trade. As you can see, this trade happened on the last trading date, March 15. These trades happening at 1:54, just a few seconds away from each other for the May 17 options at the 60 strike puts. We can see these contracts. We need to add these up to get a total amount so we can calculate the estimated trade cost. And the price here of 108. So we have to multiply by 100 to get the cost per contract, since this is in options terms. Each option represents 100 shares. So 5,669 plus 2,911 is 8,580 contracts that this investor traded. Okay, multiply the cost of 108, and we have a total trade cost of $926,000. So quite an unusual trade for this amount of money. And let's take a deeper look at the chain to analyze this trade. Okay, so the May 17th, you can see here, this was the position for the Mays right here. We are also in this position. We simply followed this position. And as we mentioned, they were buying it for 108. So when we analyze this trade, you can see clearly this is a bearish trade. If Zoom goes down, you can see these options become profitable. Okay. We are simply following this position because it does not meet our criteria for a high probability of profit trade. Number one, it does not exceed $1 million. Okay. You saw that this trade was about $926,000. So what we found is that the $1 million trades, I have a lot higher probability of profit, better accuracy, because those traders are willing to risk more. Okay, so if you want access to the $1 million trades, go to our website where we share the trades of very, very wealthy investors. And sometimes they are insiders trading on leaked information. Okay, but when we traded based on their trades, then it is not inside information anymore because their trades are publicly available. All right. So for this trade, you can see on the Greeks, it's a bearish short position because it's a negative delta. Okay. If it was bullish, it would be a positive delta. Okay. And we can see that the break even here is actually around that $60 level. It's actually $59. Okay, because we paid about $100 or $1 in price, so 60 minus 1 is 59. So by May 17, Zoom has to drop below that $59 level for these options to be profitable. But if Zoom starts to drop immediately, you can see on the purple line, it immediately starts to become profitable. So that is why this investor thinks Zoom could potentially start dropping pretty soon. Does not have to wait until May 17. Okay. And we can see on the profit here on the y-axis, we can see here the amount of profit we could potentially make if it drops and crashes even more all the way down here, 4,000, right? So these are put options that don't have a cap to it. Okay, so this investor seems to be very, very sure of something is going to happen to Zoom, or they could be very, very nervous that something may happen and they want to hedge their position because they may have stocks on Zoom, and that these put options are a hedge for them. So, for example, if they had some shares of Zoom, we can add this into the analysis so you can see 100 shares of stock represented by one put option. You can see what happens is if they had shares of stock, they've essentially limited their loss, because you can see if Zoom dropped to this $59 level, they would have lost $512 per trade here. If they did not have these put options, you can see at the $59 level, they would have lost about $797. So that's $200 about more, right? So they could be using these put options as hedges. So that's something to keep in mind as well. But the fact of the matter is, something is negative about Zoom, okay? Either way, buying these put options do cost money. So why are they even buying them if there was no negative potential news that could happen to the stock, right? You can see here on March 15, on the last trading day, for these May 17th, these 60 strike puts, volume 12,000, much greater than the open interest. So we know these are opening trades where they are opening these put options. They are not closing out of them. They are opening these trades. And so something could be happening to Zoom, and why they are opening these trades. That's based on their knowledge, right? Their research that they've done, or the information that they have. We don't need to do all that research on Zoom. We just need to be able to analyze these trades of wealthy investors and follow these trades, set up option strategies that also reduce our risk. And that is what we do on our website. You can see that if Zoom were to drop to that $59 level, you can see it would actually break a year to date low, because you can see at the this year the lowest was $60. So down at the $59 level, we can see $59, Zoom would have to drop more than 10%, right? So expect a potential 10% drop on Zoom by May 17. Okay, so that's what this is telling us. And so even if we don't want to trade Zoom on this, we at least know we can trade other stocks if we want to go bullish instead of going bullish on Zoom. For instance, let's say we wanted to go bullish on Zoom, but because of this data, well, now there's reason not to necessarily trade Zoom at this time. Okay, so we can use this data for many reasons. If we wanted to invest in Zoom in the long term, maybe we want to wait now. So this type of data is very helpful in investing or trading. So if you want to learn more, go to our website. We will put a link at the top here, and let us know in the comments below. What do you think will happen to Zoom? Are you aware of any potential news or problems with Zoom stock that could make this go down at least 10%? All right. Take care and have a great day.